Hello guys. First, let me know that you can hear me, okay? In the meantime, I just pin a post so that if you are here, you don't forget it, okay? I just did it. So please let me know that you can hear me clearly. Uh, then I will go to the today's streaming. So I'm done almost. Okay, over here. Hmm, okay, done. Yeah, thank you. You can hear me with a breaking voice. I know. My voice is like the market. Sometimes it takes the sell side liquidity, sometimes it takes the buy side liquidity. So, how are you all? How are you, everyone? I know all of you are fine. No need to ask me. I'm very fine. And thank you, Julie. So there is the market. I'll just remove this all. I don't need actually this all. You all know all the level, okay? So right now price was over here and it has taken the sell side liquidity, but look at the price. It didn't show me that it would like to go lower. Instead of that, it went lower to this week. Kinda, it's telling you I went lower to take the sell side liquidity. Please don't think I'm going lower. Okay. So what we are gonna learn today? We are gonna learn some kind of price action today. In the meantime, actually, I have to close my session early because my sister is coming home, so I have to go to receive her. It's almost night over here. I mean, it's dark already. So when she will call me, I have to go to receive her. That's why I don't know how long I can be stay over here, but I want to stay until 8:30. Blotto Lotto, good evening. Okay, here we are already in night at night. Okay, so good night, brother. I didn't watch. I mean, see the price action. I just want to go first about the price action, then we will talk. Okay. So actually, dollar index it has taken the sell side liquidity. If you see, it's over here and lower over here. There is no. I mean, except this week, I don't see anything. I mean, nothing is over here in daily chart for dollar index. That is important for me. Actually, let me just see. Okay. That is the consequent encroachment of this order block. I mean, this is the order block and the order block weak consequent encroachment. So price actually came to that level and now it started to go higher. I am expecting that using CPI it will go higher. That is my expectation. No one will take a risk. I mean, no one will gamble today. I told you for from the beginning of this week, I think so. CPI is kind of monster. This is the you know the dangerous, what can I say, the like very dangerous animal, something like that. Okay, so don't even try to push your button, never ever. When you will see it's just in front of you, so you will just watch the price how it reacts. That's all, nothing else. I'll go faster to the hourly chart and I will remove this one. And actually I am doing my analysis, so don't, you can just watch, okay, how I do this type of things. So it actually came lower. It has taken the sell side liquidity, gave me the market structure shift over there. Now it's trading over here. There is a very little fair value gap. I'll just mark the fair value gap over here. I think it has traded over there already. I'll just mark it. And yeah, it has traded that fair value gap already. So I'm expecting the higher price for dollar index. And there is only one barricade over there, in my opinion. This is the barricade. I want to see that market will go through this fair value gap and it will be very energetic run. Okay. What's up, buddy? I'm very okay. Don't know. Okay. 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 Good evening. Good evening. Good evening, all of you guys. So I would like to complete this. I mean, these boring things first. So I want to see that market will go through this fair value gap. This is my expectation. Again, guys, I don't know which way price will go. I mean, this is CPI. We will anticipate price after CPI. Okay, after at least 15 to 30 minutes after CPI, you will start to look for a entry. But before CPI, no entry. And as you, all of us, I mean, including me, we are beginner, so we will actually wait until 9:30 opening. We won't take any kind of risk after 8:30. We always will wait until 9:30. When we will learn how to trade, I mean, how to read the price action, then we will go and jump to the, I mean, jump to the chart. We will look for entry. And I have uploaded the video about yesterday's fair value gap. After the session, when you will get time, please check that video. Over there, I actually explained how you know this fair value gap will be important later. That is the thinking of the, I mean, that is the theme of that video. Okay, so I hope that will be useful for you guys. And if you think it's useful, don't forget to like and give me some kind of comment over there. I mean, your opinion in the comment box. That will be helpful for me, because later when some new people will come and they will start from that video, they will actually see the comment box, and they will see, I mean, the reaction from the previous viewers. Okay, that is really helpful. That will be really helpful for me. So please don't forget to write something. I mean, good or bad, it's up to you. If you think it's bullshit, you will write it down over there. I mean, please don't watch this video, this is bullshit. I don't care about that. I mean, I don't mind. If you think it's bullshit, you will write it down. But whatever, you will just write it down, your opinion, to the comment box. That will be really helpful, brother. So I don't want to go 15 minutes. No, nothing is in 15 minutes. So my expectation is it will go higher, and later I will see where it can go. All of these places are very juicy right now. It has traded over here. I would like to go first to the E-mini S&P, and that is the E-mini S&P. Right now it is actually trading over here. It went through this week, but still it's inside the daily fair value gap. So I don't want to see it will go above this monthly fair value gap. I think it will trade somewhere maybe 25 75% of this fair value gap, maybe, or to the top. I mean, it will close the full fair value gap, then it will start to go lower. All of us actually expecting the lower price, but let's see how it reacts. Okay, nothing is certain until now. I mean, before CPI, it's very difficult to uh, predict the price. It's very difficult. There is a very small fair value gap as well from the daily chart for E-mini S&P, and this fair value gap has also the fair value gap high, so that is also very important level. We will see how it reacts over there. Let's go to the 1 minute or 1 hour chart. So there is 1 hour chart, and if you see, look at the price, guys. I mean, it actually has made so many liquidity to the lower portion. Okay, at the upper portion, it actually take the liquidity. You see, it went higher, came retracement, went higher, take the buy side liquidity, little retracement, went higher, take the buy side liquidity, again went higher, take the buy side liquidity. So in my opinion, there is no buy side liquidity, I mean, research over there. So it should go lower. That is my expectation from E-mini S&P as well. And from here to the 15-minute chart, mm, you can mark this fair value gap, but as this is CPI, I don't think so it has any role. Okay, but you can mark this one for later use. I mean, I'm not sure, but can. Alaikum assalam. So it can be used later. Right now, until CPI is gone, we have nothing. We have to wait until 8:30. Then we will try to find some kind of setup or something. You can expect where price will go, but you can't be sure where price will go. Okay, I'll go to the NASDAQ. Then I will try to go to the, the Euro USD as well. Um, I forgot to remove this. Actually, okay. So it's over here. It actually went through this order block, so I don't need that order block anymore. This is the daily fair value gap, but I really want to see this won't be traded. Okay, maybe it can touch the lower part or little bit weak, it's okay, but this fair value gap shouldn't be closed, it should be open little bit. Okay, that will help me to think that market will go lower. And you see this sell side liquidity, and there is also some more sell side liquidity. When I will be in hourly chart or 15-minute chart, I will show it to you. And all of you guys, I hope you have marked today's opening gap, new day opening gap, I mean the closing price from 5 p.m. yesterday, and the reopen plus price at 6 p.m. from yesterday. Okay, that is your new day opening gap. You have to mark that gap. That has a very great role in future market. So right now there is this parallel gap that is you have to be considered. And to the lower portion, lot of sell side over there. So I want to see how it reacts over there. I don't need this on as well, because this is CPI. I am removing this type level. Okay, these levels I am removing because CPI actually don't care about anything. Okay, so right now prices over here, there is your sell side liquidity, hourly fair value gap. This is also hourly fair value gap. You have very nice clean sell side liquidity from here. All of this liquidity are very important. Still now I'm thinking that market will go lower, but if this is the last barricade, okay, this daily fair value gap, let me go to the daily chart again. This is the last. Oh no, from daily chart there is another level actually. I mean, this is the order block from daily chart, daily order block. This is also very important. So we will see how it reacts. If it can go above and it wants to trade this one, we will see that. We will see. Okay, right now you don't need to predict the price. You don't need that on before the this type of news. You will just watch the price. Yeah, you can just do something like I'm doing here. I'm expecting price will go lower. You see this sell side liquidity, price will go lower. Maybe it will go higher little bit, it will take the sells buy side liquidity, then it will go lower. I'm expecting this, but I am not sure where market will go. No one is sure before CPI or FOMC, PMI. Yeah, PPI is nothing. I mean the yesterday's price, PMI, PPI. I don't care about PPI. I can trade in PPI. Uh, I can trade in FOMC as well, but CPI, then PPI, Powell speak. Oh man, they're like monster. So you can avoid them. FOMC is better actually. I love FOMC. Not yesterday's FOMC, the FOMC which has the press meeting actually. So I really love to trade FOMC. I would like to go to the Euro USD first. I want to see the price over there. Okay, all of the price. If I see all of the market actually reacting the same way, so right now price is over here. It didn't trade the order block level yet, but sell side liquidity here is also sell side liquidity. Everywhere, every market is showing that we have lot of sell side liquidity. Please come and take them all by using the CPI news. All of them are telling this. Okay, so what should we expect? So it has traded the consequent encroachment of this fair value gap. Now it can go to the lower part of this hourly fair value gap, then boom. And I will just remove, I'll just put it over here, because this low and this low, that are relatively equal low. That is very, I mean, uh, you can say that is very juicy, something like that. I mean, magnetic price can go through this. This is the hourly fair value gap. We will see how it reacts. Okay, after CPI, we will expect some kind of entry or a setup. But before that, we have nothing to do. Okay, CPI is one, then NFP, then FOMC. Non-farm payroll actually kind of. I mean, you can trade non-farm payroll, you can trade FOMC, but CPI, in my opinion, you can't trade CPI. You can't. And Powell speak, that is very. You can trade Powell as well, Powell speak, but it's sloppiness. Okay, I mean, so many manipulation happens before the Powell speak and after the Powell speak. It's my own experience, so it can be different. I mean, people to people, it can be different. It my experience, okay. And then PPI is nothing. It's just shit. I mean, it's very easy to trade. PMI little different. I mean, little difficult. PMI also very difficult sometimes because sometimes we get some big manipulation in from PMI. NFP also, yeah, non-farm payroll. You can say it's difficult, but it tradable. CPI, no way. So for Euro USD is over here. I will go to the 15-minute chart as well. So it has actually cleaned all of the buy side liquidity, gave me very nice market structure shift. Went to over here hourly fair value gap. I mean the consequent encroachment of the fair value gap. Now it should trade the lower part of the fair value gap. Then I mean it can go lower. Okay, so that is my expectation. And you see this low, they are the relatively equal low. So this should be the target, first target. This would be the first target. We will see how it trade. But I really don't want to stay in Forex. I'm very sorry guys because I'm not trading this. There is no precision here. Yesterday I have shown you this. I mean in my Twitter I have uploaded a screenshot and I have shown you here. It worked, but it didn't work with precise price action. So I really don't want to waste over there. I would love to see this one, how it works. And just a second, let me just, okay, it should be 5 minutes. Okay, just a second, guys. I need to just. So you see this high, they're very suspicious. Okay, so before CPI, it can go up first. It can tap to the lower part of the daily fair value gap, then it can start to melt down and it can go to this outside liquidity. So that is also a very high probability. I mean it will go first high, I mean something like that. It will go high, it will take all of this buy side liquidity, tap to the lower part of the daily fair value gap, and then it will break down. This is also a very good probability as because it has actually made the buy side liquidity, I mean the equal highs. And yeah, that's all. But yeah, it can go straightly lower as well. But what I want to see, I want to see a lower run. That's all. Okay, brother. So we have 4 minutes left. Now it's time to gossip. Hello. Okay. Mm, Para, what is the CE for? Who is CE, brother? I missed it. Para. I don't know who is CE you are talking about. Hello. When is an entry safe? Only PM session today. Open art. Actually, the rules is after the news, after the big news. I mean, CPO or any kind of big news, you have to start to look for the entry after, I mean, 15 to 30 minutes. Okay, after 15 or 30 minutes, you will see some kind of setup. But it's always better to skip the morning session. I mean, the session when price actually release. And for us, we are actually very new. I mean, we all are new over here. We don't know how to read the price. So it is forbidden for us to take an entry before 9:30. It's forbidden, okay? You can't take your entry before 9:30. It's forbidden. I don't care how beautiful setup you have seen in the chart before 9:30. You have to avoid that. And you have to, I mean, you have to be the master of your emotion. If you can't be the master of your emotion, you will be the loser at the end of the day, okay? I think first go lower, then high. Ovinovo. Okay, brother, we will see. I want to see actually lower run, but yeah, it can go higher. I won't mind. No one can predict the price. I mean the news price, okay? I have to run. Thanks a lot. Okay, brother, run faster. Blow Dolodo. Run faster, brother. Praveen, C is middle of part of fair value gap. Yeah, C is also it is if you just mark the consequent encroachment, I mean CE from the week, it is also you can write CE to the middle of the week. I mean, if you mark this week and the middle part of this week is consequent encroachment, middle part of any kind of fair value gap is consequent encroachment, middle of the order block is mean threshold, middle of the, I mean, any kind of breaker is consequent encroachment, but threshold is if it is proportion block or order block, then you have to write it down mean threshold. Okay. Sulaiman Raja, consequent EE. Consequent EE. What does it mean, brother? Consequent encroachment, he or she new to the concept. I don't know he's new or not. Bamsi Mupla, maybe he's talking, I think for DXY what you marked CE. I will go later, okay? I would like to see the price action at 8:30. I really love to see that. How you determine daily direction. I have made a video, Suleiman, yesterday's price action, depending on yesterday's price action. I have uploaded a video about daily bias. You can check that out. And right now I have already done the thing. I mean your question, the answer I've already done from daily chart to 15-minute chart, depending on weekly analysis. So my weekly analysis is telling me that market will go lower, and depending on my weekly analysis I try to, I mean, frame my price action depending on my weekly chart, I mean weekly analysis. Okay, so 20 more seconds we will see how price react, and this is CPI, so be careful guys, sit tight, we would like to see some kind of dramatical run. Okay, so let's see what actually happened over there, and please never ever try to catch this run. Okay, okay, let's see, it went lower. So it is hot, it is. I will go over here to the 15-minute chart now, and I will go over here to the 5-minute chart. I mean, sorry, not 5 minute, it's 1 minute. So this is the price action right now. Don't think you can take any kind of entry over here. It is forbidden for everyone to take any kind of entry. I would like to see how this new day opening gap work. Okay, I want to see this opening gap right now. This is very important for me. Okay. Uh, T2. Yeah, T2 is my name. Avinav. T2 is my nickname. CPI news is positive. Okay, I don't actually care about positive or negative. I mean, I really don't understand them. Only I understand how it will work. That is my thinking. Okay, I don't understand how the news will. I mean, It will be positive or negative. I don't know. I don't understand them. Only I understand the price action. Coffee. What is the difference between CPI, CPI, and CPI? I told you that I really don't know what are they. Uh, I only mark the CPI, and when I have seen the CPI, I get alert that this week we will see some kind of, mm relatively higher manipulation, accumulation. We will see that before CPI, and then the news will release. After news, we will look for our entry. So it is what it is. Actually, it started to went lower, but I really wanted to see that it will in the buy side liquidity first, and then it will go lower. But it actually came here. I will mark. I will start to mark the level now. Okay, I will see how it react over here. And brother, we are just reading the price right now. Okay, we have no entry, no framework, nothing now. We are just reading the price, how it, react at a specific level. That's all right now. We have nothing to do except waiting. Obviously, we can trade. Obviously, we can trade, brother. If you see the news is at 8:30, you have to wait until 8:45 because the manipulation phase will complete within 15 minutes. So you have to wait at least 15 minutes. But if, I mean I'm thinking that you are new, so if you are new, then you have to wait until 9:30. Before 9:30, you can't go to the chart and take any kind of entry. This is forbidden for us. Okay, who the whoever is new, this is forbidden for them to take entry before 9:30. Anything can happen over here. If you'd like to know something else, you can ask me now, because we have the leisure time right now. We are just waiting. I was hoping more violence. Okay, more volatility. I wanted to see that it will go to all of this place and it will come somewhere here. Then s- it will do some kind of accumulation phase over there. It will take the buy side liquidity, then clear the sell side liquidity. I wanted to see that, but it's very, very cool. I mean, today we don't have any kind of a storm to the sky. It's very calm, and this is unexpected. So it has come to this fair value gap. This is the fair value gap from 15-minute chart, and there is another fair value gap over here. I'll just remove all of this because I have already described about this to my video. Please don't forget to watch that video. I hope that will be helpful for you. And I will remove the opening gap as well. Don't need that. Uh, I mean, so right now price actually came to this fair value gap, upper part of the fair value gap. So what is the rules? Price has taken the sell side liquidity. It has given you the market structure shift. You have two fair value gap. You see, from look at this leg. This is your first fair value gap. This is your second fair value gap. I'm telling, okay, if you would like to take your entry, you have to take your entry to the first fair value gap. Your stop loss will be below the consequent and cost line. That is our expectation. Okay. Now we will see this fair value gap, or this fair value gap is going to, it is going to be important or not. That is our expectation. Okay, we will see how it reacts. Then we will keep this fair value gap or not. That will depend after the price. Right now, this is the news from, this is the run from the news. So we have nothing to do. Do you get my point, brother? It has taken the sell side liquidity, gave you the market structure shift from 15-minute chart, and you have got a first look. Here is no fair value gap, nothing over here. So this is your first fair value gap. This is your second fair value gap. Your entry will be to the top of this fair value gap. Your stop loss will be to the just below to the consequent encroachment of this fair value gap. Your stop loss will be there. That is our expectation. Now we will see how price react over here. If it should, if it has shown us that it would like to go higher, it should have react from this fair value gap or maybe the consequent encroachment. I will accept the price if it comes to the consequent encroachment. I will accept that. But if it failed, then this fair value gap will be very important for us. For sell or for buy, it will depend later. But right now, we will see this how this fair value gap will work. Okay. Okay. So. So unlike the okay, there is breakaway gap and B pair, right? Yeah, there is a breakaway gap here. And BPR, what do you mean by BPR? I don't see any kind of BPR over here. Just price just price just came to the fair value gap, so there is nothing. I mean, related with BPR. Balance price trends. Okay. Hi, Julian. Good morning. Over here it's already night, so I should say good night. I'm kidding. Good night, brother. I'm sorry. Good morning, brother. Since yesterday was manipulation because of news, then is today continuation with the small same move all day. Actually, we see the continuation of the, I mean, expansion in Wednesday and Thursday. So we have Thursday now. As we had this news, we got this continuation from yesterday. Okay, you see the continuation. This we get from yesterday. Then it was manipulation. It has done this thing, and at last it has made some kind of liquidity over here. Look at the liquidity. This is all liquidity. Okay, now I was expecting that price will go lower and it will take the sell side liquidity, but if it went higher, take the buy side liquidity first, maybe tap to the lower part of the daily fair value gap, then started to go lower. I would look for a sell from this two fair value gap, the 15-minute fair value gap, and also learn how to read the price. How you uh, match your higher time frame with your lower time frame. You see, I didn't have anything over here. Now I have some level, and price is actually reacting this level. Why? Because this level are coming from 15-minute chart. Maybe you can go to the hourly chart and you will mark this hourly fair value gap. You can do it, brother. But in 15-minute chart, you will most of the time I spend in 15-minute chart, because 15-minute chart is kind of reflection of the weekly chart. Okay, so that's why I try to come over here in 15 minutes. Now you have two level. One level is here, one level is there, and you know how these two level should be used. You all know, right? This is your first travel gap. This is your breakaway gap. Sorry. So if you would like to take your entry, you will take your entry over there. Your stop loss will be just below the consequent encroachment. That should be your framework. Now you are watching the price over here. Is it supporting your idea from 15-minute chart over here or not? Okay, right now price just came to the fair value gap. It went higher. It tried to come to the upper part of the fair value gap again. We are just watching the price. We have nothing to do before 9:30, but we are just reading the price right now. Okay, this is how you will read the price from the blank chart. You have to mark some level. You are learning actually how you will mark the level, and then you will see how it reacts. I told you always mark the consequent encroachment. I can measure it by my eyes, but this is for you guys. Okay, I'm trying to mark it. Okay, so this is the consequent encroachment. So you will mark the consequent encroachment, and you will see, is it telling you that I wanna go high, maybe to this imbalance or this newly opening gap. I would like to trade over there first, then maybe it will go lower. It can happen. But this is the way you will read the price. Jillian, breaker block from yesterday. Max. Yesterday, max. Breaker block, breaker block, breaker block. You are talking about this breaker block from 15-minute chart. Let me know, Julian. Give me some like. There are 18 people. Oma, lot of people. 18 people are listening my boring lecture. I have to tell something. I mean, very special, which is very valuable. I don't have anything like that. I told the same thing again and again and again, and that is the thing. Okay, you can say this is the breaker, but for being a breaker, there should be some requirements. I mean, uh, how to explain this? Why? I mean, you can say the this is breaker actually. Yeah, you can say I mean I've seen some YouTubers actually mark this as a unicorn model or something. So that is their unicorn model. I mean, there is a breaker with a fair value gap that's gonna be a unicorn model or something like that. Okay. But in my opinion, for being a breaker, there should be some requirement. I mean, I will talk about that later. Okay. I will talk about that later. I don't want to do this thing right now because breaker is something, trust me, if you trade breaker block, 95% time you will be correct. If you understand what is breaker, then 95% time you will be correct. And breaker is very strong. I mean, very strong. So right now, until now, price is actually respecting this level. Okay, okay? I'm just removing this one. You guys can remember the level. I mean the consequent encroachment level, or you can just mark it to your chart. You have to do it. Now, if price can come here to the upper level of this fair value gap and give you a very nice market structure shift with a fair value gap, that will be your, I mean, that should be your target. I mean, entry pattern something, okay? But if you have to watch the time as well. What time is it now? It's night near about like 8:50. What time is it now? 8:45. So you have no entry before 9:30. Remember this and write it down to your notebook. And one more thing, guys. Yesterday, when I have actually showed you the fair value gap and I asked you, tell me why I have told you that this fair value gap is very important. Only 3 to 4 people actually replied me over there, and rest of all, I don't know. There was a scene like near about 200 people has seen that post. I got 3 to 4 replied, and now if you don't reply me, I mean, when I ask something about my teaching, not teaching, my sharing, and you don't reply me, I don't know your level. I mean, you are learning or not. I will have no idea. Then how can I continue? Then actually I got some replied from their hands. Hands actually gave me the answer. I mean, that was the answer I wanted to look, and I think he actually takes some notes. And if you don't give me the answer, or if you don't share your thinking with me, you are understanding or not, how do I know that you are learning? It's very impossible for me. Okay, you see this new day opening gap, I marked it from yesterday. I have posted. You see, this is the closing from 5 p.m. This is the opening from 6 p.m. So this is very important for me. I will see how we trade over here. Hello, did you guys give me some kind of love? I did it. Love, 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 love. It's 100% love. So far actually price respecting over here, and you know where is the buy side, right? You all know where is the buy side. This is your buy side. This is your buy side. Now, how do you frame your trade? This is the only resistance. before taking this buy side liquidity. I mean, price can go to this new day opening gap and it can retrace from there. It can happen. Okay, so you have to be careful until it is trading over there. This is how you will actually frame your trade. Okay, just wait some more times and look at over here to the 15-minute chart. If you look at over here, it is actually making a fair value gap over there. You see this candle low, this candle high, this is a fair value gap. So what else can happen? It can just, I mean, the very next candle can trade over there, I mean, the to the fair value gap, and then it started to go lower. It can also happen. That is why it is very. Now if you want to know what I was thinking, I mean, I'm thinking is before 9:30 this should be intake. I mean, price won't go above the buy side liquidity. That is my thinking. Even price won't go below this low. Just at the opening range, I will see how it reacts over there. If I see any kind of entry setup for buy side before 9:30, I can go for them. Okay, I mean, I will go for them, something like that. Okay, I'm not telling you that I will take entry or something, but if I take entry, you don't press your button because you are learning. You are not doing trade over here. If I take a trade and I take a loss, I will know why I took that loss, but you won't know. Then what you will do, you will think, okay, maybe you are not learning or you are not getting the point. I mean, accept the entry, you will take everything from here. Is it understandable, brother? Bro, my screen be going black sometimes, so I can't reply on my phone, but I be watching on my TV. Lol, keep going regardless. Okay, brother, no problem. But you've been accurate like ICT during this crazy, but you were actually showing us second for second. I really want to show you how to read the price. Okay, I mean, this is the important thing. How you will read the price. When I have opened my chart, there was nothing, right? There was nothing. Then what I did, I marked this buy side. What I was expecting, I was expecting price will go lower. I marked this buy side liquidity. I marked this two level. I marked the consequent encroachment from here and here. Now I'm telling about this. All of this thing. Why I'm telling about this. The first, what I expected first, it will react from this fair value gap. Remember, this should be our breakaway gap. This from the upper level of this fair value gap, price should react. Price did this. Now I'm expecting that it will go through this fair value gap if it would like to take the buy side liquidity. Maybe not now, maybe just before 9:30. It will go through this fair value gap and it will clear the buy side liquidity. That is my expectation. In the meantime, it can't go through this fair value gap. If it go through this fair value gap, it has to go through this fair value gap again with a big run, not kind of this type of run. Okay, just go back like that. This is the way you will read your price. Now you are reading price. Try to understand, guys. Don't think how you will take entry. I am not telling you about entry. Entry is the easiest thing. I will tell you how to take entry. I will start to take entry in front of you guys if you promise me that you won't do that. I know how to manage the trade. You don't know. I mean, I'm just assuming that you don't know how to manage your trade. So if I take an entry, I can manage my entry. I mean trade, but you can't do it. So if you promise me that you won't take entry, I will show you how to take entry. But trust me, this is the fastest you are actually reading the price. What is price doing over here? It has respected this fair value gap. See, you are reading price. It came here, it went higher. Now where it is reacting, look at the price, guys. It went higher, 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 higher. It is stopped over there. Why it has stopped over there? Because that is your opening gap, new day opening gap. Look, it went there, it started lower, I mean consolidate, something like that. That means it is actually respecting to this level. Now you will see this is your resistance level. I'm just telling you like the way. If you are a retail trader, please don't mind. I'm not trying to insult you or something. I'm just sharing my thinking. Okay, So this is your resistance level, this is your supporting level. You will see price how react to these two level. Okay, if you see it actually react from here and it went lower, that means price is telling you, brother, I don't want to go higher, I want to go lower. Don't try to take any kind of buy. If you see price came here to this upper level of this fair value gap and started to go through this fair value gap, maybe one time it go close the body, then it came back, it will do this type of things. That means price is telling you, brother, I don't want to go lower, because you see I just came to the upper level and I started to go and break this new day opening gap. So I want to go higher and take the buy side liquidity. Why you are trying to take short? This is how you are reading the price first. You see this low and this low, they are relatively equal low. So you have to think all of the price action over here. I mean, every candle is important. Every candle is telling you the story, where it would like to go, why this two candle has made this, I mean the sell side liquidity, why it has made that. There is a reason. There is a reason for everything. Are you guys understanding? I mean, d- do you get my point, what I am just trying to tell you? Just give me some feedback, otherwise how do I know that you can listen? I mean, you are understanding. Okay, so look, the very next candle, this one is also making the sell side liquidity. Why it is making the sell side liquidity? You have a very clean buy side over here, very clean buy side. Look at here, this high, they're almost clean high. I mean, almost, not almost, maybe, yeah, almost. There's a very little gap from there. So this is very clean highs. Price came lower to this fair value gap. Now it is making some kind of liquidity here. Why? So that price can, the retail trader will think, okay, this is the, I mean, support level. So whenever price came to that level, it is started to go higher. What they will do? They will just take buy from there. I'll just mark this one, but you have to mark this. Okay, I'm just telling you candle by candle. What is it doing over here? So they're actually buying from there, and what price is doing, price is going up to this level, it is not breaking this level. What the sellers are thinking, okay, this is a very strong level, they don't have this new day opening gap, they don't have that. They are seeing that this is a very strong level, whenever price is coming here, it is going lower. Though this is 1 minute chart, I don't care, it is happening in 5 minute chart, in 15-minute chart, in every chart. Look here, when price came here, it went lower, when price came here, it went lower, again lower. So those who sell over there, where is their target? This is their target. This low is their target. That price will go to that low. Whoever has bought from here, where is their target? This high is their target. Every time you will see this type of things, they sell here, and this is making our buy side. I mean, we know price will go above that level. Why? It's because the guys from the retail trader, they sold over from there. Okay, so now you are expecting that price will go above there. So what do you need? You need some kind of sell side liquidity, which should be taken first. Then you will get some kind of market structure shift. In the meantime, it will break this. I mean, new day opening gap. Okay, because this level you have. Retail trader doesn't have this level. You have this level. You know this level is very important. They don't know. So you will wait to break this level. Why? Because market can manipulate only the, not only the seller but also the buyers. That means it can go above and then it come back below the, I mean, opening gap, it closed over there. What does it mean? It means it went higher to take the buy side liquidity. So it will go lower first, then it will go higher maybe again. So you have to read like that way. Okay, I will remove this level. Um, this is not important actually. I draw that because of you. So right now we are reading the price. So far we are correct. Price came to this fair value gap. It went higher to this new day opening gap. Is exactly to this new day opening gap. Now we will see where price would like to go. If it would like to go higher, then it will show us some kind of, I mean, sign that it wants to go higher. How do we know price will go higher? We will see some kind of body close above this fair value gap, I mean above this newly opening gap, we will see that. Okay, when we will see that before 9:30, that is a sign that okay, market can go higher. Uh, like opposite, okay, if it starts to go lower, it breaks this low, or if you see some kind of big run through this, I mean fair value gap, what you will do, you will do nothing. Why? You have this breakaway gap. Below this gap, below this gap you have the breakaway gap as well in the consequent encroachment. I have already taught you how to use this two fair value gap. So if it wants to go higher, you have a trade setup. If it wants to go lower, you have nothing until this breakaway gap is traded. Okay, you have nothing. Is it clear, guys? I am talking, and you are listening. This is all boring lecture, brother, all are boring lecture. And now, one more thing, brother. When I first started to learn ICT concept, what did I see? I saw, okay, market came here, it went higher with a very nice displacement. There is a fair value gap. You see this candle low and this candle high. Okay, I'm just telling you, you are not like this. What I did before, I did this all before. Okay, I saw this is my market structure shift. You see this high, this is my market structure shift, this is my fair value gap. Take entry over there, market will go higher. Where? To the, I mean, I mean as per ICT, this is the low hanging fruit. I mean this fair value, let me mark this one. This is the low hanging fruit. Okay, so take entry to over there, place your stop loss somewhere here. This is a low hanging fruit. What I got? A very clean, I mean very nice loss. I started to think this is bullshit. This doesn't work. ICT maybe do some kind of, artwork so that guys can, I mean, believe in him. And I started to watch against, I mean, someone's video against him. Okay. And later when I started to understand his topic, I mean, his speaking, what he wants to say, then I get one thing, and that is, don't just jump to the trade. You will listen this, most of the time ICT talk about this, that don't don't just go to the chart and take the entry. You have the time, so you come here, you take the entry. No, don't do it. What you will do, you will read the price first. When you will see everything is, I mean, with your expectation everything is working, then you will find for setup. Now I understand what does it mean, and I am trying to tell you this thing. Okay, if it is not understandable, you will ask me, I will give you the answer. What you are doing now, you just forget everything about entry. You have no idea about entry. I mean, I don't have any idea when I will take entry. I have no idea. I'm just reading the price. What is price doing? I have the level here. You have the level in your chart? I hope you have the level. So you have two level. Now what else I can say? You have to take your entry always? No, you don't have to take your entry always. If you see price is not going as your expectation, you have no entry. You have to expect that, I mean accept that. What will you do? You will go to Forex, I mean GBP USD or AUD USD gold, and you will try to find another entry over there? No, you won't do that. You will go only one chart. You will read the price. If you see you have the entry, I mean you see some kind of price action which is actually matching with your expectation, okay, then look for entry, then look for setup. This is very easy. Why you will do this? If you do this, what is your benefit? You will avoid the losing trade. And all of you know, if you can avoid the losing trade, what is the result? All you have in your account will be the winning trade. It's very simple, brother. So don't know, yes, coffee, yes, understanding, Bamsi. Thank you, Dada. Yes, Dada, I understand. Thank you, brother Vinobo. Coffee, yes. And Martin, I think Martin, you are new, brother. I didn't talk to you. I mean Martin C. Welcome. If you are new, welcome to my channel. Julian, or not welcome to my channel, welcome to my boring lecture, okay? Julian, not boring, 100% listening, bro. Okay, thank you, man. This my world. Lol. Lot of love. Yeah, lol. I mean, the abbreviation of lol is lots of love. Thank you, brother, for your lots of love. Mohammed Kafi, yes, don't know. What happened? Don't know. Yes, new. Okay, welcome back, brother. Welcome. Sorry, I mean, welcome to my boring lecture. Steven, opening gap is not showing my chart. I don't have opening gap in my chart. I mean, this new day opening gap. It is it is the closing price from yesterday 6 I mean 5 p.m. The opening price at 6 p.m. from yesterday. This two level is your opening new day opening gap. Okay, I didn't write it down yet, but I will write it down later when I will have so many level over here. But right now I don't need that. Okay. Music live. Hey all. There is a big scary thunderstorm in Sydney right now. Perhaps trading CPI action might come. CPI action, man. CPI is kind of bigger storm in my opinion. Okay. Steven, lot of laughs. Give me some laughs. And if any of you are new and think it is helpful, I know it is not helpful because it is boring. Nobody will tell you this. Everyone will show you how to take entry, and I'm not gonna show you only how to take entry. I'm gonna show you how to read the price. And in my opinion, that is the most important thing. If I just give, I mean, I will talk what I will say. Price is over here. I'm expecting price will go there. So price is now in the fair value gap. I'm gonna take short. Boom! I took short. You see, that is my winning trade. If I do this, I don't know how you will be benefited, but I mean, so far, how many live streaming I have seen? I have seen all of them. I mean, almost all of them actually talk like that way. So price is over here. It has respected this fair value gap. Why it has respected this fair value gap? Why didn't you tell me that? Why don't you tell me that? Why this fair value gap? There is also another fair value gap. There is one fair value gap. There is another. There is another. Maybe there is a lot of fair value gap. Why price actually came to this fair value gap? Why it is reacting from fair value gap? Tell me that, brother. I want to know that. How do I know when there is nothing in my chart? And how do I know that this fair value gap is important? I tell you why this fair value gap is important for me. I'm repeating this again, okay? Look at the price action over here. Price came here, take the sell side liquidity, gave you the market structure shift. You see the market structure, clean market structure shift. Where is your fair value gap? Do you have any fair value gap here? This candle close, this candle close, this candle close, this candle close, this candle close. There, do you have any kind of fair value gap over here? Nothing. Where is your first fair value gap? There is your first fair value gap. Where is your second fair value gap? There is your second fair value gap. What will you do when you will see two fair value gap, one above another? You will expect market will come to this upper level of fair value gap. We don't take entry to the 15-minute chart, guys. Just be remember, okay? We are reading our price. We are expecting from here, and we will match 1 minute chart with 15-minute chart. Then we will find entry setup in 1 minute chart, not 15-minute chart. Now, what price did? It came to the upper level of this fair value gap, and you will take your entry over there. Your stop loss will be lower, I mean below to the consequent encroachment of the lower fair value gap. What is this fair value gap? This is the breakaway gap. Why this is breakaway gap? I told you already. I mean, this is a long discussion. I don't want to talk about breakaway gap now. You will put it over here. So this should be your expectation from 15-minute chart. Now come to the 1 minute chart. What price did? It came to the upper fair value gap. It didn't go to the consequent encroachment of the second fair value gap. Instead of that, it started to go higher. Where did it go? To this level. Why this level is important? Because this is new day opening gap. How do you get that? From yesterday's closing and opening. I tweeted it before even session started. If you are in my Twitter, you already know that I I mean I tweeted this. So I'm not telling you lie. I did it. So far I remember. Did I? Did I tweet it? I forgot it. I thought I tweet. I mean the new day opening gap. I forget it. If I don't do it, I'm really sorry. But if you any of you are in my Twitter, please let me know that I tweet it or not. Okay, because I forget already. So it actually came to this new day opening gap, and then it started to react from there. Now think I will uh, just look. This is your chart. Okay, how do you know? Just let me. Samuelson. Okay, thank you. How are you, brother? Uh, yeah, I forgot that I or not. Okay, so very familiar description of the issue with first starting to trade ICT. How did you resolve the issue? Waited for the time. Very familiar description of the issue with first starting to trade ICT. How did you resolve the issue? Waited for the time. Ashish, I really didn't get your question, brother. If anyone understand, please let me clear. I'm really very weak in English. So where I was, yeah, thank you, Kafi. I forgot that I did it or not, because this is very important. This new development. Look, this is your empty chart. You are here now. I'm showing you, brother. I'm thinking that market will go higher. It will react from this fair value gap or this fair value gap. Do you have any idea why? If you ask him, why this fair value gap, brother? Trust me, write it down. He won't tell you why. If he knows, he won't tell you. So that is the thing I'm doing here. I'm actually telling you all of the boring, I mean, all of the useless information I'm giving to you. But trust me, if you take notes, I gave you already so many information over here. If you take notes, you will learn how to do it. Right now, look at this chart, see, and now look at this. Now you have a direction. You know where price went. Where price went. Is there any level? Do you see any kind of level over there? What is over here? Nothing. Why price came here and stopped over there? There is nothing. Why price came here and stopped? It reacted from there. Why it didn't go to this fair value gap? It should go to this fair value gap. Then we should expect some kind of reaction like that. But it didn't do it. It came here. It stopped there. It started to give me some reaction. Why? You know why? There is your level, brother. So that is the way you will read the price, brother. Entry is the easiest part of this game. I mean, yeah, you will take loss. Trust me, you will take loss. I take loss. Everyone take loss. ICT himself take loss. Everyone take loss. But if you know how to read the price, yesterday you remember when I uploaded the video, I stopped out at the break even. Immediately I take re-entry. Immediately. Did you see that things again and again? No, you didn't see that. Why I did take entry? I have uploaded the video to my channel about that video. So please, after the session or whenever you get time, if you think my information is useful, then please watch that video. That will help you to, I mean, how to mark a fair value gap, how it get important, step by step. I explained over there. Okay. So sorry. So that is the reason for telling all of this information to you. I'm not trying to bore you. I'm just trying to give you some information so that you guys can track the chart. Why it is coming here, why it is going there. And entry is the easiest part. For example, you see it came here, you know how it will work. It has traded from the consequent encroachment but didn't take any kind of liquidity. So what it should do, it should come to the upper level of this fair value gap. I have explained all of this, right, guys? I have explained it. So it should come to the upper level of the fair value gap. Then it should give me some kind of react. This should be, I mean, this happen. If it doesn't happen, we will see how this breakaway gap react. In that case, if it come and go through this breakaway gap, this fair value gap will be for no use. I mean, we won't use this fair value gap anymore. This fair value gap, I mean, breakaway gap will be very important for us. I'm tired. Please explain breakaway gap one more time and why that's one. If you have ever seen after the market, I mean, clearing the sell side liquidity, I will give you this example. You will think vice versa. Okay. After taking the liquidity, when you will get the market structure shift, if you see two fair value gap one above another, your expectation will be you will take your entry to the upper level fair value gap and the lower fair value gap will be won't be traded. Okay, this should be act as a breakaway gap, and that is actually the theme of the breakaway gap. But if you go to my channel, I have uploaded a video about I forgot it. Can I check it, guys? Will you be bored? I'll just check it. I forgot the name because that is very important. Okay, I'll just check it, please. My apologize. I forgot my videos. So from playlist, actually, mm, study section maybe. Uh, ad blocks are not allowed on YouTube. I'm not using ad block. So from here, what is breaker? Which is market structure shift? Okay, here. What is breakaway gap? Guys, Julian, please watch that video. Okay, I explained everything to that video. You will find that to the study. I mean study to my playlist. You will find it over there. I mean, in study section, all of these videos are very important with so many information. If you take notes from every video, you will be benefited. I can promise you, you will be benefited. So from here, if you can just watch that video, what is breakaway gap? I explained it over there. And also, please don't forget to watch this video, how to avoid losing trade. I mean, I I made this video. I'm not telling you for that. I'm telling you this is the video. It will help you to avoid kind of thousand losing trade. Okay, only this video. If you watch this video, how to avoid losing trade, you can easily avoid near about thousand video. And if you don't really understand what is I mean, it is not clear over there. I have made another video maybe. What is market structure shift? Yeah, this one. So if you want to watch this video, how to avoid losing trade, first watch this video. What is market structure shift? After watching this video, you will go to the how to avoid losing trade. Then you will understand everything from this video. Okay. I'm sorry, guys. I was just. It's kind of advertisement. Okay. You guys don't help me. What can I do? Okay. I think you told us yesterday that if it's not during macro time zones, then we should expect deeper fair value gap to get filled. I I have stopped to talk about macro. Man, I mean, I don't want to talk about macro anymore, music life. So yesterday, so far I remember, I didn't talk about anything about macro. So far I remember because macro, I am done. I'm done with macro. I don't want to talk about macro anymore. If you want to learn, you just go over there to my, I mean, any of you actually would like to learn about the macro, please go to my channel. From there, you will find the macro. I mean, in the playlist, you will get it. Okay. Deeper fair value field, no, it is not. Macro is totally different. You can't mix anything with macro. Music like nothing. Macro is fully different. Okay. Ashish, earlier you mentioned when you first started to trade ICT, you'd take entries based on random fair value gaps after displacements and trades ended in losses. I wanted to ask, how did you fix such trades? I'm telling you this, brother. I fixed them when I have started to read the price. Then I started to know, okay, every fair value gap is not for taking entry, it's for reading the price. Later, I get it. But first, when I started, I didn't know how to read the price. So I'll just mark the this constant encroachment. Okay, and that is also important for me. So I have just marked the consequent encroachment. Every week is kind of gap. So always mark the consequent encroachment of any kind of gap. Any kind of gap, you have to mark the consequent encroachment. I can measure the gap, I mean the fair value gap, consequent encroachment by my eyes. But if you can do the same thing, then you don't need to mark the consequent encroachment of the fair value gap or the consequent encroachment of the week. But if you don't, then please mark everything. Okay, I mean, whenever you will see there is a chance to mark the consequent encroachment, please mark it. This is also very important. Okay. So Abhinav, now what I read is price make equal lows and don't take the low previous and more higher. Uh, Abhinav, look, right now what you are doing, you are you are watching two level. There is your on level above the market. There is your second level below the market. I mean below the market price. This fair value gap, this fair value gap. Okay. So you are not watching liquidity right now. I mean, you don't need liquidity. What you are reading? You are reading where price would like to go. This is your first thing you have to understand. Where price would like to go. If it would like to go higher, it will break this. I mean, what can I say? The new day opening gap. If it would like to go lower, it will break this fair value gap. If it want to go lower, we have nothing to do. Why? Because we have another breakout gap here, and we all of us know actually how to trade this. I'm talking about this for last 2 weeks. So if you are with me, you already know it's how to actually trade over here. But if we see any kind of sign going higher, we see it can break this gap, then we will see how did it take any kind of liquidity or not. Okay, here I was giving you an example. I'm not telling you that it is gonna take the liquidity or something. I didn't want to say that. I wanted to say you, I was actually giving you the example over here. Okay, right now we are watching where price can go. I think it's clear, brother. First you need to, I mean, fix the direction, which way price would like to go. A lot of us doesn't know the difference from a MSS and a liquidity sweep. Brother, I have already showed you all on the videos over there, market structure shift. Trust me, if you watch that video, maybe you will need to watch that 1 or 2 times because my English, it's like bullshit. So maybe you will need 1 or 2 times to watch that video. But if you watch that video and you try to understand, you will understand what is market structure shift and what is actually liquidity taken. Okay, you are most welcome, Julian. Go and watch all video. You guys learn a lot. Can bet. Thank you, brother. Yeah, it's full of information, but you have to take notes. Always, you have to take notes. You have to go to your chart and you have to, I mean, mark them. Okay. Yeah, I will spend all day watching your tutorial videos tomorrow. Don't, don't. I mean, don't push yourself. Okay? Let it go with the flow. I mean, slowly. Let it go slowly. You will learn. If you push yourself, you won't learn. Music life. I'm a slow learner. If you are a slow learner, you will be the stronger. If you are a fast learner, you will be the slower in earning field. Okay. If you are slow learner, you will be the stronger. I mean, a stronger, a stronger person in earning field. Trust me. So still expect dumb questions. You can do that. I mean, when I started this concept, I had so many dumb questions on my mind. The difference is there was no one to answer me, but here I am to answer you. So don't be silly, brother. Whatever question you have, you can ask me. I don't mind. Actually, sometimes I am busy, so I get busy time. That's why maybe I am not able to reply you guys. But later when I see your question or something, I always try to reply you. If you are with me for near about 1 or 2 months, you already know that I gave everyone reply. I mean, I gave reply. I love that. I love to communicate with you guys. Yes, Dada, understand. Okay, Vinabo. Thank you, brother. Can you talk about how you identify drawn liquidity, please? Oh man. Ashish, are you new to my streaming today? I mean, this is the question I would like to know first. I mean, this is your first day in my streaming, Ashish. So we have 7 minutes left, and we will see how it works over here. Right now, I have just removed this because I know where is the consequent encroachment right now. To the you see this candle low, that is the consequent encroachment of this week. So that is how I keep remember. Do you remember what is the consequent encroachment of here? You see this bear candle. Its opening is the consequent encroachment of this fair value gap. Okay. Oh, okay, Ashish, you are new, so that's why you actually asking me. Drawn liquidity for me, I look for equal highs or equal lows. You see this high, they're relatively equal or maybe equal, okay? Whenever I see this is my drawn liquidity. I don't care about single high, single low or something else. Whenever I see this type of equal highs or relatively equal highs, okay? If I show you, you see the low and this low, they're relatively equal low. I mean, if you mark the low from here, then this is the relatively equal low. This is my drawn liquidity. If you look over here, this low are clean low. This low is very near to this low. This is relatively equal lows. This is my sell side liquidity. Want to go lower more? I'll show you more. Don't worry. You see this low, they're relatively equal low. This is my drawn liquidity. Whenever I see this type of thing, I mark them as my drawn liquidity. Right now, I have only this buy side liquidity, nothing else. I don't have any kind of sell side liquidity. If it wants to go over there, it has to go through these two fair value gap. Then I will expect for some kind of lower run. Until then, I'm expecting that market will go higher and it will. Oh man, it will take the buy side liquidity, okay? Because I have only drawn liquidity over here. I have nothing lower here. At the first time when before the news, I told you that I'm expecting price will go lower and it will clean this type sell side liquidity. I was expecting that because of CPI. CPI is kind of monster like that, okay? It actually give you near about 100, 200 handle long run. But today's CPI is kind of very, what can I say? Give me a word. I forgot the word. It's kind of very slow, okay? Slow, something like that. I didn't want to see like that type of run. So it is what it is. So market came here and all of you know how I mark all of this place. And right now I'm expecting market will go higher. It will take the buy side liquidity. What is the resistance? I mean, what is the barricade over here to stop the price going higher? Only this new day opening gap. This is your resistance. It will actually stop. I mean, it will stop the price for going higher. There is nothing left here to stop the price. If you see it can go through this, you can take your entry. Now, there is another fair value gap. How do you use this fair value gap? Maybe price did something like this. Let me just show you. It went higher. It came here. You take your entry over there. Maybe I'm not telling you that this is the entry pattern something. Now, your I mean target is this buy side liquidity, but price actually came here, started to react here, something like that. How do you use this fair value gap? What we actually expect from this fair value gap? We expect the price will come here and price will go lower, take the sell side liquidity. That is our expectation from this fair value gap. This is our expectation. If price can go through this fair value gap, then we will start to see how the consequent encroachment reacts. Okay. Later, this fair value gap will be important for us. But until it is price went to this fair value gap, this has nothing, because we have very clean buy sell liquidity over there. We are expecting price will go through this fair value gap and clean the buy side liquidity first, then we will see how price react this fair value gap. Am I clear? Guys, I have to take the call. I'm sorry. I'm sorry, guys. I have to go. My sister already reached, so I have to go actually. So I don't know what to say, but I'm extremely sorry because I just have to go. Nothing to say. And to be honest, it is always, I mean, it's really very, what can I say? Satisfaction or something like that. I'm very happy to talk with you guys. I mean, to give you answer or something like that. I really love to do that. And I don't know. So that is okay. So I will just give you answer weak. Sam Hussein, what is weak? Tame. That is the word. Okay, yeah, 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 yeah. I'm not weak. Actually, what I was telling. Oh man, it is a late entry. Okay, no problem. Something like this. My internet. I wanted to take entry to the breaker actually, and the target should be here. Here, that should be the target. When price came here to the breaker, I wanted to take the entry, but it is what it is. That is my thinking actually. So if okay, it hit me out, but it is what it is. It should react from the breaker. I mean the consequent encroachment of the breaker. It should react from there, and then it should go higher and take the buy side liquidity. That is my expectation, but it is what it is. I don't care. Now it should take the I mean the liquidity. Whatever, guys. That is all. Actually, I would like to go. Thanks for the explanation I asked, because I have been looking at drawn liquidity based on highs and lows. Okay, brother. I hope that will be helpful for you. And Julian, I see ICT sometimes saying I accept the price, go there in velocity when ring bell sounds at 9:30. I don't take at that in consideration the velocity it takes when volatility arrives. Yeah, that is the thing, brother. Actually, I have no time to talk about that right now, but you see right now prices over here, I am expecting this price will go higher. Why I am expecting that? I have already told you all. Price actually reacted from the consequent encroachment, then it came to the upper level of the fair value gap, so it should go higher. Now it should react this breaker. That is the thing I am telling you. I will use the volatility. Okay, I will use the volatility. I will take my to the upper level of this breaker. I will put my stop loss below this breaker. I mean, I will give some. I mean, you see, the first time I get stopped out, I don't care. If I see I am stopped out, I will re-entry to the consequent encroachment of this, and I will put my stop. I mean, the target profit over there. That is the thing. After reading the price, yeah, first time I get stopped out, I don't care, brother. I will re-entry over there. I will go from over there. Why? Because I have read the price. I spent too much time reading the price. That is my, I mean, that is my expectation. Okay. And now, if I had already in this, I mean, if the second time I took my entry over there, I'm already put my stop loss to the break even. I mean, on the break even, I will take some partial over there. When it will go above this high, I will take some partial over there. So I'm already profitable. Where it can come? It can come to the upper level of this. I mean, this breaker, the upper level of the breaker. It can come over there. Then it will go start to again. It will go higher. You see this candle. This is the order block. Let me mark it. This is your order block. It should react like that way. So if you just take your partial over there, what do you see? How many pips over there? It's near about 17 pips. So it's not normal. I mean, it's huge, brother. And you are stopped out to the break even. You are already profitable. And if you just, I mean, hold your trade, if you put your stop loss somewhere here to the breaker, lower to the breaker, you can wait until it trades over there. You can wait like that way. It is up to you. But my system is I will take my entry and I will put my stop loss just below the breaker. If I am stopped out, I will re-entry to the breaker. I will put my stop loss just below the this low, and I will put my target profit over there. Whenever it will go above this high, I will take my partial. I will put my stop loss to the break even. If I am stopped out, I will be stopped out. I don't care. I will look for another opportunity. Okay, so that is the, I mean, that is the power of the price action. So I think, guys, it is, I mean, what can I say? Uh, it is with full of information. So if you would like to understand the price action, you have to do it like that way, and you have to build your strategy. Why you are taking this? Why you are doing this? Everything you have to believe. When you believe, you will just, I mean, you will be the profitable trader. Okay. So I have to go right now because my sister is already over there. I have to go. I'm very sorry. I'm extremely sorry. My apologize, and we'll talk to you later. And if it over here, then please let me know by tweet. I mean, in Twitter, please give me some kind of message or something. I want to know because I won't have the chart with me. So that's all.